Hello, welcome to the show. It's the Money and Markets Show, and I'm Charles Boy, your host. Now, very interesting news coming out of the trade docket for Uganda. According to the reports from Ministry of Finance, Ugandan exports increased by over 11%. And these numbers moved from around $585 million to the region of over $650 million. And this has been on account of better performance of fairly unusual areas, including cotton, simsim, and of course gold, and gold going to the Asian markets. Coffee also fared fairly well, but we'll be discussing that in our subsequent shows. Once again, it's Money and Markets, and I'm Charles Boy, your host. Welcome. It hasn't been an easy run for the Uganda Securities Exchange over the past 3 to 4 years. Of course, we've seen activity being dampened here and there, but this time around we try to pick the performance of the boss looking at one of the listed companies. That's the Cipla stock.
In terms of the questions, I think I'll respond to some of them. There was a discussion about AFCFTA and how we as a company are participating into it or we are benefiting from it. With respect to AFCFTA, as I shared with the shareholders that we had an in-person visit of the Secretary General of AFCFTA at our business, where we sat together and discussed in detail about how we both can leverage what is coming on. They can leverage as a big pharmaceutical company which is already existing in local manufacturing space, which is one of the priority areas for them to promote local businesses. And for us, it was how we access those markets, right? It is always a challenge in Africa to access different markets. So we discussed about how they can help us and work on easing of regulations so that the business becomes easier. And in pharmaceuticals, it is more complicated than others because there is a lot of restrictions with respect to the human medicine regulations in each country. The second was that how we integrate the market. Can we do something about pool procurement? And because pool procurement enables an easy buy from the local manufacturers. We also spoke about how the capital could be easily accessible to local manufacturers at a lower interest, obviously, right? So on all the three areas, we are in continuous touch with the FCFTA, and we are trying to work how they can develop the policy and can involve industry as well in taking the inputs with respect to the policy development. In Zambia, in last 2 years, we extensively worked to collect the money, right? Because it was a challenge where you have a deficit of a significant value in your balance sheet. So we worked on that, and I'm happy to say that out of the total which was outstanding, right now we only have 7 billion Uganda shilling to collect, which we are also confident that within this year we should be able to collect. Even with that, with collection, it has opened up more opportunity for business. So we are now looking Zambia as also an avenue to restart the business, which we did in past and stopped because of the issue of payment. But now with the risk mitigations in place, obviously we're not gonna do the business where we again sell the goods and don't collect. So now it is with controls where we make sure that we have either advanced mechanism to avoid any failure of paying us back. So we're working on that, and hopefully we'll start doing business with them as well. So last financial year we had a good year. I will not say it was incredible because there were less of a growth, so we declined in terms of our revenues. However, the work we did on our operations and specifically improving the gross margin has led us to keep the profit lines in the similar to what was last year. So if we remove all the exceptions, there is just a small decline of 3% versus last year in terms of profits. Our operating profit is healthy and it's strong, and we are hopeful that as we build the new product, the portfolio will be much more better. For the financial year 2021-22, the company has declared the dividend of 7.3 billion Uganda shillings. For financial year FY 22-23, the company is proposing, and if it approved, the dividend will be 9.13 billion Uganda shilling, which shows a 25% improvement versus last year. We continue to focus on 3 areas: engaged employees, optimized processes, and purposeful growth. In terms of engaged employees, health and safety of the employee who work for your company, their learning and development so that in future when opportunity to scale comes, they can take and lead and build the capacity. And we make sure that our employees remain motivated and engaged so that they can contribute to the growth of the company. In terms of optimized process, we will continue to focus on cost management and optimization, system and processes improvements, and digitalization. For growth, we have chosen 3 levers: robust product pipeline management, in order for making sure that we have a continuity of newer therapies and newer product which we can launch in the domestic market as well as the regional market. A customer base penetration, where we're going to focus on increasing what the current customers buys from us, and the regional market acceleration, where we are trying to target regional markets.